Good afternoon. Welcome to the weekly Livestock Market update. I'm Brownfield Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
I would ask you how about those Tigers, but then you could say how about those Boilermakers, and it was a very rough start to NCAA basketball weekend for both of us.
Oh, I thought you were referring to the Mizzou Tigers sweep of Tennessee last weekend.
Oh, no. Sorry. I was referring to the other round ball, but that's okay. All right. There is plenty of March Madness going on this week and next week as we actually round out the month. Today, though, we're going to talk livestock slaughter numbers. We're going to talk cold storage. We'll talk a little bit about what happened this week in the markets as well. And I think what's really interesting, and I can't wait to get into this conversation, is talking about beef production for February of this year. So that's a little teaser about what's to come. But let's recap what happened this week in the markets.
Yeah, Meghan, this week on the cattle side, cash-fed cattle were about 25 cents higher on the week. Those feeder cattle markets this week were $1 to $3 lower. On the future side, the April live cattle futures contract was up 65 cents, while the April feeder contract was really basically unchanged on the week. We did lose on the choice box beef price. It was down $3.30. Ribs, chucks, rounds, loins, those were the ones that really let us lower on that beef side. This week on the hog side, cash barrels and gilts down $3.15. We also lost on the April lean hog futures contract. It was down nearly $2.70. Pork cutout value was also lower this week, down $4.80. You know, that puts it $25.54 below where it was a year ago. And that weakness this week really came from hams and bellies.
The pressure in the cash hog market in the last couple of weeks has been, and I guess probably more than the last couple of weeks, has been pretty intense. Are there a lot of things coming into play here? Are we thinking about supplies? Is it a demand concern issue? Is it just the trend in the market right now?
Well, I do have, I guess, some demand concerns just given what's been happening. We are talking about some additional supplies relative to year ago levels, but not that much. You know, I look here at what's been hams and bellies leading that pork cutout value for a period of time, and thus I think barrel and gilt prices. You know, you look at hams, ham prices this week lowest since early April of a year ago, but bellies the lowest since June of 2020. Just reminds us we're seeing, I think, some changes in terms of that demand side of the picture, and we'll have to keep watching that as we go forward. Perhaps demand not as strong as we've been seeing the last couple of years, and you and I talk about this a lot, but perhaps some signs that consumer expenditures on meat products, particularly pork, may be somewhat less certain as we look ahead here, as general economy concerns continue to be top of mind, at least for some folks.
And really, that's the one thing you and I have been focusing so much on. Yes, prices have been great, and thinking specifically in the conversation we have about the beef aspect of it and cattle prices, but that demand is the one that we just don't know. And that's that unknown that is really unnerving, knowing what's going on with an economy that's not great, not perfect.
You try. So I always say I try not to be the rainy day economist, but yes, that downside risk we've been concerned about for a number of months, and maybe we're getting some signs that it's more than a concern at this point. We'll see on the beef side. You know, again, the nice thing about beef markets in particular is supplies are going to be tight. We know that's coming. Beginning already. And so I think that's a little bit of difference when you're talking about pork supplies that are growing a little bit this year. Harder, I think, to hold some of the prices that we've seen of the last couple of years, and a little easier on the beef side. But certainly things we want to be paying attention to as we look ahead.
All right, let's talk slaughter numbers. Run me through what we're looking at for both cattle and hogs this last week.
Yeah, so cattle slaughter for the week ending March 25th, USDA reports a run of 626,000 head. That's down 5,000 head from what we did last week and down 31,000 head from the same week a year ago. On the hog side, a run of 2.457 million head this week, according to USDA. That is down 35,000 head from what we ran a week ago, but 46,000 head above the same week a year ago.
We're going to start to take a look at those year-over-year comparisons this week. Scott, as you look at that, there's a decline on the cattle side of things, which is something we haven't talked a lot about. Are you surprised, or is this kind of what you expected, knowing what we've been going through the last year?
Yeah, so not surprised, and I think this gap keeps growing relative to year ago slaughter, but year to date down 2.6% in total cattle slaughter. I'd remind us, all right, so we're talking cattle slaughter here. Cow slaughter matters in this discussion. Cow slaughter's been down relative to a year ago as we've started 2023. So a number of things that I think are important on the cattle side of that equation. Hog slaughter, on the other hand, up 1.6% year to date relative to a year ago. So I think I said this last year, but tell of two cities here in terms of now we've flipped the other direction and talking about reductions in cattle slaughter and increases in hog slaughter.
All right, that's a nice segue into livestock slaughter, which is one of the reports we'll take a look at this week. And as we talked a little bit at the beginning, beef production saw a pretty significant decline year over year.
Yeah, that's right, Megan. So February of 23 to 2.1 billion pounds of beef production reported by USDA this week. That is down 7% relative to a year ago. And just to make sure, it looks like we had the same number of weekdays in February of this year relative to February of 2022. Also the same number of Saturdays. So similar. All right. So monthly cattle slaughter down 5.1%. Again, beef cow slaughter down 11.7% is part of that story. But you also got steer slaughter down 4.4, heifer slaughter down 5.0. So across the board, we're really talking about, less slaughter. But the other piece of this puzzle is cattle dressed weights. They're down, what was 842 pounds. February of 22 is now 826. And, again, I'll say high feed costs, but also a change in the mix of slaughter, I think has been important to some lower slaughter weights. So the combination of lower slaughter weights and less slaughter gave us that 7% down in beef production.
Different story on the pork side of things, though.
It is. So I sometimes say, well, thank goodness we also talked about 2 pounds less on the hog dressed weights in February of this year relative to a year ago. So 216 pound average hog dressed weight relative to hog slaughter that was up 0.3% for February. So the net of that is we were down 0.5% in pork production for February at 2.2 billion pounds of pork production.
It's going to be interesting to watch these numbers as we go through. I really think like numbers just kind of make me nerd out a little bit anyway. And I'm not even an economist, but watching how these kind of set up year over year, and maybe we start looking even in comparison to back to a 2020 or a 2019 to see just how stark of a contrast it is in the trends that we're seeing.
Yeah, and I so for sure, and I would say the other piece of this puzzle for 2023 is going to be the watch of competing meat supplies. We got chicken production up 2.8% for February of this year relative to a year ago. So as we think about what consumers' choice set looks like, additional chicken supplies likely push chicken prices lower relative to what they faced last year. And this idea, what do consumers pick? I wish I felt comfortable in knowing for certain how that plays out, but I think we're going to have to watch those competing meat supplies as we look ahead as well.
Cold storage also out this week. And as we take a look at beef and pork stocks and freezers, run me through those numbers.
Yeah, so 500 million pounds of beef in freezer stocks at the end of February. I was glad to see some reduction relative to the previous month, so down 5.9% relative to the end of January. Anecdotally, there was a lot of discussion about freezers being full, and perhaps this report contradicts that to an extent. On the pork side, too, 521 million pounds of pork in freezers. That is up 9% relative to the same month a year ago. But when we start looking at that comparison, longer term, 2015 to 2019, relative to February of this year, we're down 16%. So, we're not at record levels by any stretch when you compare back to where we were kind of pre-COVID, if you will.
Does it also kind of exhibit how drawn down our stocks were at some point if we're growing year over year, but we're still below that average pre-COVID?
Yeah, so we were. So we drew down stocks hard in COVID, and it's taken time to build back. It wasn't that long ago. You kind of look back at mid 2021, we had 400 million pounds of beef in freezers. So, you just kind of compare where we were then to now. It is a different situation. We were setting on the pork side maybe at a low of about 400 million pounds as well, a little later in 2021. But we're really rebuilding back to maybe what were more traditional levels of stocks. And I always say, yes, I'm interested in stocks, but when you look at we're holding stocks of beef and pork to the tune of 500 million pounds, and every month we're producing a little more than 2 billion pounds. I'm more interested in the production side of that equation than cold storage most of the time.
All right, that's it for us this week. It's a pretty impressive slate of reports next week, primarily because quarterly hogs and pigs come out, and also perspective planting. So as you're looking at that hogs and pigs report, Scott, what is the one thing maybe that you're looking ahead to see what story that's gonna tell and what that sets us up for the rest of 2023?
Yeah, so so the downside story for me is we get the report next week and it says we've grown inventories. It's not what I expect to get out of the report, but if we talk about a bearish report in the face of what we've already talked about as declining hog prices, the world gets worse for pork producers. And I think the combination here of prospective plantings and hogs and pigs, well, this could be all over the board for hog producers in particular. When you realize those hog rations are primarily corn-based rations, let's hope we talk about 91 million acres of corn in the ground. If we talk about much shorter acreage estimates in this prospective plantings report and corn prices go up, that combination is not going to be a lot of fun for pork producers who are already struggling to see any signs of black ink at this point.
Anything else you're looking ahead to next week in that hogs and pigs report?
So I think those are the big ones. There's going to be some interesting state-by-state stuff going on, but for me, it's just let's hope we don't show a lot of growth. Maybe the positive spin we get out of this is more contraction. I expect a lot of sideways still in this report of no real contraction, but not a lot of real growth either, which to me then tends to be fairly neutral for these markets. And we're going to continue to talk about some modest growth in pork production for much of 2023.
And we also have restaurant performance index, and just kind of remind folks why that number specifically, or that report specifically, is of interest to our cattle and hog producers.
Yeah, so when you think about just the percentage of meat consumed away from home today, so 20 years ago, Meghan, restaurant performance index frankly didn't matter to overall demand side, but when way more than half of what we're consuming is happening outside of the home, getting some beat on what are being reported as current sales, current traffic. All those things to me are somewhat a more immediate read of where this economy is affecting consumer choices. So I'm thinking another important piece of the puzzle. We kind of get all three next week: input costs, supply side, at least for hogs, and then another look at the demand component. And these markets have been awful nervous the last week or two with all the banking issues, another quarter point increase in interest rates. So keeping close tabs on the demand side, I think, is important as well.
I think when things start to calm down, you might hear like a collective sigh of relief nationwide.
So I'm curious what calm looks like now, Megan. You ask a really good question, and my definition of calm is unfortunately a lot more volatility than we're typically used to. As I think we've become, as consumers, less responsive to price changes, which just means a lot more volatility when we get modest changes in supplies of meats, leading to record high to then record low prices. So I'm not sure what calm looks like anymore, but I'd be happy for the days of calm.
I don't think anybody knows what calm looks like anymore. I certainly don't. I have like 2 5-year-old tornadoes that are constantly in motion. I don't know. They don't ever sit still. And I think that means we don't either. That's what I feel like the markets are doing. They're just like my 5-year-olds running around in circles.
The information of the last 60 seconds is what drives markets for the next minute. And then of course it goes somewhere else.
Yeah. Very similar to a 5-year-old. All right. Scott, it's always great to see you. Thank you for your insight. We look forward to talking to you next Friday. There'll be plenty for us to get into. We'll talk to you then.
Sounds great, Megan.
So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can submit questions and comments there. And if you want a rundown of the crazy days in the markets every day, Monday through Friday, check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.